You take too many trades. You know it. I know it. And deep down, you know that's the real reason you're not where you want to be. It's not your strategy. It's not the market. It's not because you need better indicators or some proprietary system. It's because you can't sit still. You can't do nothing. You can't wait. And that impatience is costing you more than you realize. Let me show you something. Go back through your last 30 trades. Right now. Pull up your journal or your broker statements. Now separate them into two categories. Category 1. Trades where you waited. Where everything lined up. Where you saw your setup forming and you let it develop completely before you entered. Where you felt confident, not desperate. Category 2. Trades where you forced it. Where you were bored or frustrated or trying to make back a loss. Where you knew it wasn't quite your setup but you took it anyway. Where you entered because you felt like you should be doing something. Now look at the results. I'm willing to bet your Category 1 trades, the patient ones, have a significantly higher win rate. Maybe 60, 70, even 80%. And your Category 2 trades, the impatient ones, are probably break-even at best. Maybe worse. Same strategy. Same market. Same trader. The only difference is patience. And yet, if you're honest with yourself, most of your trades fall into Category 2. Why? Because your brain treats waiting like doing nothing. And doing nothing feels like failure. You've been conditioned your entire life to believe that action equals progress. That working harder gets better results. That if you're not moving forward, you're falling behind. And that works in most areas of life. You want to build muscle. You go to the gym. You want to advance your career. You put in the hours. You want to learn a skill. You practice. More effort equals better results. But trading doesn't work like that. In trading, more effort usually means worse results. Because in trading, the best move is often no move at all. Your edge isn't in your ability to find trades. Your edge is in your ability to wait for the right trades and ignore everything else. But your brain rebels against this. Because waiting triggers a very specific fear. The fear of missing out. Every minute you're not in a trade, your brain is calculating opportunity cost. That stock is moving. That setup just formed. If I don't take this now, I'll miss it. And missing opportunity feels like a threat. Because in evolutionary terms, missing opportunity could mean missing food. Missing safety. Missing a mate. Your ancestors who were too patient, who waited too long, they didn't survive. The ones who acted quickly, who seized opportunities immediately, they're the ones who passed on their genes. So your brain is hardwired to act fast and act often. And in trading, that wiring destroys you. Let me tell you about a trader I know. He's been trading for 4 years. He has a strategy that works. He's back-tested it. He knows his win rate. He knows his average winner and average loser. The math checks out. But he can't seem to stay consistently profitable. He'll have a good week. Maybe up 3 or 4%. Then he'll have a bad week that gives it all back. He's been stuck in this cycle for 2 years. So I asked him to track something for me. I asked him to mark every trade with a number from 1 to 5. 5 means it was a perfect setup. Everything he looks for was there. 1 means he forced it. He knew it wasn't ideal but he took it anyway. After a month, we looked at the data. His 5s had an 82% win rate with an average risk to reward of 1 to 3. If he only took 5s, he'd be making consistent money. His 1s and 2s had a 38% win rate with an average risk to reward barely above 1 to 1. These trades were bleeding his account. But here's what shocked him. 60% of his trades were 1s and 2s. He was taking 6 mediocre trades for every 4 good trades. He had a profitable strategy but he was diluting it with garbage. I asked him why. Why take trades you know aren't your best setups? His answer was honest. He said he felt like he should be trading. Like if he wasn't active, he wasn't really trading. Like waiting for the perfect setup was wasting time. That belief, that waiting equals wasting time, that's what was keeping him stuck. Here's what you need to understand about how your brain processes trading. You have two decision-making systems. Let's call them the fast system and the slow system. The fast system is automatic. It's emotional. It runs on instinct and pattern recognition. It's designed to keep you alive by making split-second decisions based on incomplete information. The slow system is deliberate. It's logical. It requires conscious effort. It's the part of your brain that does math and analyzes data and makes plans. When you're sitting at your desk planning your trades for the week, you're using the slow system. You're calm. You're rational. You identify your setups. You calculate your risk. You make rules. But the moment real money is involved, the moment you see price moving, the moment you feel the pressure to act, your fast system takes over. And the fast system doesn't care about your plan. The fast system sees movement and interprets it as opportunity or threat. The fast system wants to act now. This is why you take trades that aren't quite right. This is why you enter before all your criteria are met. This is why you can't wait. Your fast system is louder than your slow system. And under pressure, loud wins. The only way to fix this is to train your fast system to recognize that waiting is the correct action. And that takes repetition. Lots of it. Let's talk about what patience actually looks like in trading. Most people think patience means sitting in cash watching the market. Just observing. Just waiting for your setup to appear. But that's only half of it. Real patience in trading has three parts. First, patience before the trade. This is what we've been talking about. Waiting for your complete setup. Not forcing entries. Not taking setups that are close but not quite there. This is the easiest part to understand but the hardest part to execute. Because every setup that's almost right feels like opportunity. And passing on opportunity feels like failure. Second, patience during the trade. This is about trusting your plan once you're in. Not exiting early because you're nervous. Not moving your stop because price is testing it. Not taking profit the moment you're up a little bit. This type of patience requires you to tolerate discomfort. Because watching your profit fluctuate is uncomfortable. Watching price move toward your stop is uncomfortable. But if you exit every time you feel uncomfortable, you'll never let a winner run. You'll never catch the big moves that make up for your losers. Third, patience after the trade. This is about not revenge trading. Not trying to immediately make back a loss. Not overtrading after a win because you feel invincible. This might be the most important type of patience. Because your emotional state after a trade, win or lose, is when you're most vulnerable to making mistakes. Most traders can handle one of these. Maybe two. But handling all three consistently, that separates professionals from everyone else. Now let me explain something that most traders get backwards. You think the market rewards activity. That the more you participate, the more opportunities you get to profit. But the market actually rewards selectivity. The less you trade, the better your results, assuming you're only taking your best setups. There's a concept in statistics called the multiple comparisons problem. The more tests you run, the more likely you are to get false positives just by chance. In trading terms, the more trades you take, the more likely you are to hit a string of losses just by probability. Even with a good strategy. And here's where it gets dangerous. When you hit that string of losses, your emotional state deteriorates. You start making decisions based on fear or frustration. Your judgment gets compromised. So taking more trades doesn't just expose you to more statistical variance. It also increases the likelihood that you'll be trading in a compromised emotional state. This is the vicious cycle that destroys accounts. You take more trades. Some of them lose. You feel bad. You take more trades to make it back. More of them lose because you're emotional now. You feel worse. The cycle accelerates. The only way to break this cycle is to trade less. Significantly less. Professional traders don't trade more than amateurs. They trade less. Much less. They might only take 1 or 2 trades per week. Sometimes they go weeks without trading at all. Not because they can't find setups. But because they're waiting for the setups that have the highest probability of success. They understand something crucial. Every trade has a cost, even if it wins. There's the emotional cost. The mental energy. The opportunity cost of having capital tied up. So they only trade when the expected value is so high that it's worth paying those costs. Everyone else is trading for the sake of trading. And that's why everyone else struggles. Let me give you a framework for building real patience. First, you need to know your edge. Not just generally. Specifically. Write down exactly what your setup looks like. Every criteria. Every condition. Every confirmation you need to see. Be specific. If you say you trade breakouts, that's not specific enough. What kind of breakouts? What time frame? What volume profile? What broader market context? The more specific you are, the easier it is to recognize when your edge is present and when it's not. Second, you need to track your edge frequency. How often does your complete setup actually appear? Most traders vastly overestimate this. They think their setup appears multiple times per day. In reality, if you're being honest about your criteria, it probably appears a few times per week at most. Once you know how rare your setup actually is, it becomes easier to be patient. Because you're not waiting indefinitely. You're waiting for something specific that you know will appear within a reasonable time frame. Third, you need a pre-trade checklist. A literal list you go through before every entry. Does this meet criteria 1? Check. Criteria 2? Check. Criteria 3? Check. If you can't check every box, you don't take the trade. No exceptions. This forces you to slow down. It engages your slow system. It creates a barrier between impulse and action. Fourth, you need waiting rules. These are specific conditions where you're not allowed to trade even if a setup appears. For example, you don't trade in the first 30 minutes of the session. Or you don't trade after you've already taken 2 trades that day. Or you don't trade when you're feeling emotional. These rules protect you from yourself. They remove decision-making from moments when your judgment is compromised. Fifth, and this is critical, you need to redefine what success looks like. Right now you probably measure success by whether you made money today. That's the wrong metric. The right metric is whether you followed your process. Did you wait for your setup? Did you execute according to your plan? Did you manage your emotions? If yes, you were successful. Even if the trade lost. Because over enough trades, good process leads to good results. But on any individual trade, results are just probability. Once you separate process from results, patience becomes easier. Because you're not trying to control outcomes. You're just trying to control your behavior. Now let's talk about why waiting feels so wrong. There's a neuroscience concept called temporal discounting. Your brain values immediate rewards more than future rewards, even if the future rewards are larger. This is why people struggle with saving money. $100 today feels more valuable than $200 a year from now, even though logically the 200 is better. In trading, this means a small profit right now feels more valuable than a larger profit later. So you exit early. You take your profit. You eliminate the uncertainty. This feels good in the moment. You've won. You've made money. Your brain releases dopamine. But you've just trained your brain to exit early. So the next trade, you'll do the same thing. And the next one. And the next one. Eventually you're incapable of holding a winner. You cut everything the moment it's green. Your average winner is tiny. And tiny winners don't overcome your losers. The same mechanism works in reverse with patience. Waiting for the perfect setup means delaying gratification. Your brain doesn't like that. Your brain wants to trade now. So you take the almost right setup. It gives you the immediate reward of being in a trade. Of being active. Of feeling like a trader. But that immediate reward comes at the cost of your long-term profitability. Understanding this doesn't make it go away. But it does help you recognize what's happening. And recognition is the first step to control. Here's something most traders never consider. Patience isn't just about waiting for setups. It's about waiting for the right market conditions. Some market environments favor your strategy. Others don't. And no strategy works in all conditions. Professional traders know this. So they're patient not just for setups, but for the market environment where their setups have the highest win rate. If the market is choppy and range-bound, and your strategy is trend following, you wait. Maybe for days. Maybe for weeks. Amateur traders don't do this. They try to force their strategy to work in all conditions. They take trend trades in choppy markets and wonder why they keep getting stopped out. This requires a different level of patience. Not just waiting hours for a setup, but waiting days or weeks for the right conditions. And this is where most people fail. Because waiting days feels like you're not a real trader. Like you're on the sidelines while everyone else is making money. But here's the truth. Everyone else isn't making money. They're churning. They're overtrading. They're slowly bleeding their accounts. You're preserving capital. You're staying sharp. You're ready for when conditions shift in your favor. That's not being on the sidelines. That's being professional. Let me tell you what changed for me. I used to trade every day. I felt like I had to. Like that's what traders do. If I wasn't trading, what was I even doing? Then I had a month where I barely traded. Maybe 5 or 6 trades total. Not by choice. I was dealing with some personal stuff. I just wasn't watching the market much. At the end of the month, I checked my account. I was up more than any previous month that year. I thought it was a fluke. But then I looked closer. Every trade I took that month was perfect. Clean entries. Clear structure. High probability. Because I wasn't watching the market all day, I wasn't seeing all the almost right setups. I was only seeing the obvious ones when I checked in. And those obvious ones? They were enough. More than enough. That's when I realized I'd been my own worst enemy. My constant attention to the market was creating opportunities to make mistakes. So I changed my approach. I stopped watching the market all day. I check in at specific times. I look for my setups. If they're there, I take them. If not, I close the platform and go live my life. My trade frequency dropped by more than half. My win rate went up. My stress went down. My profits went up. Not because I found a better strategy. Because I gave myself fewer opportunities to screw up. Here's what I want you to understand. The market doesn't care if you trade or not. The market doesn't reward activity. The market rewards being right. And you're most likely to be right when you're patient. When you're selective. When you only participate in the highest probability scenarios. Everything else is noise. Every mediocre trade you take dilutes your edge. Every impatient entry reduces your win rate. Every forced trade increases your risk of a drawdown. You already know this. You've always known this. But knowing and doing are different things. The gap between knowing you should be patient and actually being patient is the gap between knowing what to do and being able to do it under pressure. That gap is where most traders get stuck. They understand patience intellectually but they can't execute it emotionally. And you can't think your way out of that gap. You have to train your way out. Every time you feel the urge to take a trade that's not quite right and you don't take it, you're training patience. Every time you sit in cash watching the market move without you and you stay calm, you're training patience. Every time you do that, you're building the neural pathways that make patience easier the next time. This is the work. Not studying charts. Not learning new strategies. Training yourself to wait. Let me give you something practical to implement starting today. Set a rule. You can only take 3 trades per week. Maximum. Not 3 per day. 3 per week. This forces you to be selective. Because if you take 3 mediocre trades early in the week, you're tapped out when the perfect setup appears on Thursday. At first, this will feel impossible. You'll see setups everywhere. You'll want to take them all. You'll feel like you're missing opportunities. But stick with it. After a few weeks, something shifts. You stop looking for any setup. You start looking for the best setup. You develop the ability to distinguish between good and great. And your results improve. Not because you're trading more. Because you're trading better. 3 trades per week with a 70% win rate and 2-to-1 reward to risk will make you more money than 15 trades per week at 55% and 1-to-1. Less work. Better results. Lower stress. That's what patience gives you. Now let's talk about the identity shift that needs to happen. Right now you probably think of yourself as a trader. Someone who trades. Someone who's active in the market. That identity is holding you back. Because if you're a trader, you need to trade to validate that identity. Sitting in cash feels like you're not fulfilling your role. You need to change your identity. You're not a trader. You're a capital allocator. A capital allocator's job is to deploy capital only when the risk-adjusted return is favorable. Most of the time, that means not deploying capital. That means waiting. Waiting isn't failure. Waiting is the job. Waiting is what you get paid to do. Warren Buffett, one of the most successful capital allocators ever, has said that his job is to wait. To sit in cash, sometimes for years, until the perfect opportunity appears. He's not embarrassed about this. He doesn't feel like he's wasting time. He knows that patience is his edge. You need to adopt that mindset. You get paid to wait. The waiting is the work. Once you make that identity shift, everything becomes easier. Because you're no longer fighting against who you think you should be. You're aligned with what actually produces results. Here's the hardest truth in this entire conversation. Most of you won't do this. Most of you will hear everything I've said, agree with it, and then go back to overtrading. Not because you don't understand. Because changing behavior is hard. Because your brain resists patience. Because waiting feels passive and action feels productive. But the traders who make it, the ones who build long-term profitability, they're the ones who internalize this. They're the ones who train patience until it becomes automatic. They're the ones who can sit in cash for a week without anxiety. Who can watch opportunities pass without regret. Who can do nothing when nothing is the right move. That's the edge. That's what separates the consistent from the struggling. Not strategy. Not analysis. Just patience. So here's my question for you. Can you wait? Can you resist the urge to trade when your setup isn't there? Can you sit through the discomfort of missing moves? Can you trust that your edge will appear if you're patient enough? If you can't, you're going to keep struggling. You're going to keep taking too many trades. You're going to keep wondering why your results don't match your knowledge. But if you can develop the discipline to wait, everything changes. Your win rate improves. Your stress decreases. Your confidence builds. Your account grows. Not because you're trading more. Because you're trading less but better. The market will always be here. The opportunities will always come. But your capital is finite. Your emotional energy is finite. Your attention is finite. Use them wisely. Use them sparingly. Use them only when everything lines up in your favor. That's not being cautious. That's being professional. And being professional is the only way you survive long enough to succeed. Trading is a waiting game. The market rewards those who can wait. And patience, real patience, the kind that lets you do nothing while everyone else is scrambling, that's your real edge. Not your indicators. Not your strategy. Your ability to wait. Everything else is just details.